Welcome back, fam, for the second time today. Uh, Today, I have a very special guest with us, a crypto tax professional who's going to help us understand some of the complexities around crypto taxes in the US. Tax time is coming up in April. We don't have much time, and it is time to start preparing. I know it's not a topic we love talking about, but it's important, and I think you all are going to take away some value from this. So let's welcome Clinton. How are you doing, Clinton?
I'm doing great. It's a pleasure being here, Tom.
Yeah, it was. I met Clinton in Vegas. He was one of the only speakers at the summit that I really connected with what he was saying, and so I really wanted to bring him on and get the down low, the basics of what is going on in the crypto world. It's a little complicated. You guys know my story. I tried to do mine in the past. Wasn't a great experience. So, first of all, thank you again for joining us. Could you maybe introduce yourself? Tell us a little bit about your background, experience in the crypto field.
Certainly. I have a advanced law degree in international financial regulation, which includes taxation and anti-money laundering. And from then, I went into doing tax return preparation, particularly for internationals, which is a very complex field. And then, as in 2018, I started doing crypto tax returns. Turns out one of my clients was an enormous crypto trader. He had been my client the year before, and he just reported regular income. And then when I started doing crypto tax returns, he admitted to me that he had made a lot of money. Turns out he had made 16 million, and he wanted to file taxes. So we had it was a very challenging situation. He had done maybe 250,000 trades that year, so it was an extremely complex problem. But that's how you learn to be good, by taking on the hard challenges. So since then, my practice has grown. I have clients in 71 countries. I have a company of 20 staff that do crypto gain calculation, which is a part of the tax preparation process. How much did I make? And then also tax return preparation. I have several CPAs and enrolled agents working for me. And we also defend people in audits of their crypto income. It's kind of like the thing about why that's important. I've done about 40 IRS audits. We just learned yesterday we're winning another audit. A big audit. We just won it. The IRS gave up. And the reason that's important, it's kind of like going to get operated on by a doctor who only went to medical school and never actually did it, right? Versus somebody who's actually done it. That's the difference. Lots of people prepare tax returns. Only a couple people actually defend them. So that's why it's important, for I think crypto traders, because I actually know what the IRS is doing. I fight the IRS. I fight them for your behalf. I'm actually quite charming with them, but that's what I'm about. And right now, our company, we prepare tax returns for medium to large size traders. We do gain calculation, not just for centralized exchanges, but we also have specialized techniques for NFT traders, for DeFi. So being able to read smart contracts and classifying those. So I think we're the top of the line, I think, in terms of US tax preparation. We're the best.
All right, that's awesome. So let's start it off with maybe could you explain what crypto taxes are? I know that's a simple question, and why they're important for people like our viewers and really everybody out there.
Well, that's a great question. The Pew Research said that 42% of all crypto investors are men between the ages of 19 or 29. They've probably never invested in anything but crypto and not really aware of the tax implications. So a lot of times our first encounter with taxes, you're working at McDonald's or somewhere and you get a paycheck and the government took a little bit off the top for Social Security, and it's already taken automatically for you. You never saw it, you never missed it. But our tax code says that we have to report all of our income. Well, corporations, companies they do that reporting for you when they pay you a salary or a wage. But when you make income on your own through investing, you have to report it voluntarily to the IRS. And the IRS uses a audit process to select people to audit to make sure that people are being honest and being correct on that. Now, right now, compliance on cryptocurrencies is the number one enforcement goal at the IRS. And why is that? Is because last year, Congress gave the IRS $80 billion, which is an enormous amount of money, $46 billion of it is specifically earmarked. That means it has to be spent on enforcement on digital asset owners and tax compliance on the digital asset owners. That's you and me. So that is how much money is 46 billion. That is 4 times the annual budget of the FBI. And they're going to spend that money on coming after crypto investors. So, now they're a big engine. It'll take a little time to rev up, but they are sharpening their knives. They're practicing. They're getting ready. So it's very important for every crypto investor to know about taxes, because you have to pay taxes on your crypto income.
Yeah, thank you. For sure. And I mean, it's so tempting. Nobody wants to pay taxes, but down the road, when I started crypto, maybe wasn't the number one thing on the radar. And I think that's really changed. We've seen a huge pivot on that recently. So in order to go about these, how would you recommend someone at home, if they were trying to file for themselves or even using a CPA, what would their first steps be? What kind of information should they put together? What do they need to kind of have ready for someone to get this, to get these done?
Okay, very good. So a key concept, everybody should understand, this is number one concept. If you don't remember anything from this telecast, remember that anytime you dispose of, that is, give up ownership for any token or crypto, you experience some sort of gain or loss, and that's a taxable event. You pay taxes on the net gain or loss at the end of the year. If it's a loss, of course, it's a deduction. If it's a gain, you pay taxes on it. So it doesn't matter what you bought. A lot of people think, Tom, that I'm only taxed when I go out to cash. That's not, you are taxed. I mean, it is a taxable event, but that's not the only time. If I have Bitcoin and I swap it for Ethereum, if I take Ethereum or I swap it for USDC or I swap it for USD, all of these are examples of disposing of an asset. Each one of them, you experience a gain or loss every time I did one of those trades, and it's subject to taxation. So a very key concept. That could be very difficult to keep track of on paper. I mean, it's just impossible, especially if you do any regular trading. So you need to take advantage of online gain calculation services. And there's about a dozen of them. And they vary in ease of use and blockchain supported, exchanges supported. What happens when you use these services? If you have been trading on a centralized exchange like Kraken, you're going to get an API key from Kraken, and you're going to give it to these services, and it's a read-only API. They can pull in the transaction records automatically that way, and then the service can calculate what taxable, what gains and losses you experience trading on their platform. And when you move coins from a Kraken to a private wallet, it doesn't really know where you put it, but then when you bring it back out and say you moved it over to Bybit, then you can pull the Bybit data, and this software will map the fact that you bought it over here in Kraken at a lower price and you sold it over on Bybit at a higher price, that kind of thing. So this software is very helpful to reconcile the gains and losses. It's not necessarily fun for everyone because it's a bit of an accounting thing. And as you do more trades, that becomes a much more complex problem. The more exchanges you have, the more private wallets, it becomes more involved. If you do trading on decentralized exchanges where the data is pulled off the blockchain, that becomes a little even more difficult to classify the transactions as being taxable or not. But you use these services, and when they're all done, they generate an output file for you. It's in the format of an IRS form 8949. It's basically a spreadsheet. On such a date, I bought this coin, I sold it on this date for this price, and this was the gain I experienced. It's a spreadsheet that says that. You then take that spreadsheet and you give it to your accountant, or you upload it into TurboTax or whatever tax software you're using. And that's how you report your crypto gains and losses.
Excellent. So that kind of did tackle some of my other questions, but I think I can repurpose them. And someone asked in the chat, and I think we even talked about this previously, so I know they want to hear about it. So what should someone do if I use an exchange that doesn't exist anymore, or I use an exchange that I can't log into, like FTX. How might they go about that situation?
Massive problem. Massive problem. Um, well, there are no transaction records. Okay, so we can't I mean, you could try to recreate them, but nobody really has those records. What you do the best with what you have. So oftentimes, what happens? I mean, FTX and these are more recent transactions, but like, let's say you had coins on Cryptopia, which closed a couple of years ago. I mean, you have no records from Cryptopia; it's gone. Never going to get them. Well, so it basically creates a hole in your data records. So, for example, I might have had Bitcoin. I moved it into Cryptopia. Uh, in Cryptopia, I converted it to Ethereum, and then I moved it out. So we don't have that Bitcoin to Ethereum trade. We just knew that I used to have a Bitcoin, and now I have an Ethereum. At some point in time, of course, I'm never going to sell that Bitcoin because I don't have a record to sell it. But the Ethereum, at some point in time, I'll sell it, and then it'll show up as um, zero cost basis. That is to say, if when the software can't figure out what the price was, it'll say the price was zero. Well, we know it wasn't zero. We know you didn't get, never was, Ethereum zero. You do know that, hey, I think I bought it about this time. What was the price that time? And you have to manually uh, put in that price. Uh, so that's one strategy. The second strategy, especially as we look at something like if you were a heavy user, FTX, or one of like, Voyager, or these things where you might have had a lot of cash there, and it's now closed. You can't get those records. You ultimately might have to guess. These reconciliation tools, because of the holes in the data, you can't quite tie out everything. Sometimes it's very difficult to tie it out, or the number that comes back from these services is just ridiculous. I mean, I had one client told me the service was saying he made $100 million. He says, "I wish," So what do you do with that? Well, what you can do is you can switch to another service, try another service, or you might just have to work with your own personal gut feeling estimate. If you report on your tax return what you estimate, what you believe you made, then you'll know you'd be paying a fair amount of tax for that amount of income. And if your estimate is probably is better than anyone else's estimate, and if you can't exactly calculate it, your estimate might be what you have to report, and then you'll pay a fair tax. And then if you get audited, then all we have to do is, well, of course, we explain the case that you don't have. There'll be a lot of records missing, but the IRS has that same problem too. They can't come up with FTX records. So what we do then is when we get into an audit situation, my biggest what I do is at the beginning of the audit is we recalculate the gain. So if you go with an estimate on your tax return, you're like, I have no idea what I made FTX. I'm going to report 50,000 gain, and you get audited. The first thing we do, because an audit usually happens about a year or two later, first thing I do is we recalculate all your gains. Hopefully these records will be available, but we recalculate it, and then we give the IRS the records. We can't give them records that don't exist, like FTX records, and the IRS calculates their numbers. I don't have to prove that our numbers are correct. All they have to do is shoot holes in the IRS's data. Once they prove that their numbers are wrong, then they lose in court. So uh, it's a common problem, and you just have to report a number that you believe in.
I like that. So, if I follow you correctly, there are times when it's almost impossible to establish a cost basis or transaction, and so the best guess, like an honest guess, is probably what you go with because you literally can't get them. Is that correct?
Oh yeah, these exchanges, the centralized exchanges, they're not regulated. They have no legal obligation to keep history records for you, and they don't have a commitment to 100% accuracy. And the exchanges don't even have a commitment to even handling the records right. So, like, there's one exchange. It's going to escape me. I don't want to say off the top of my head which exchange it was, but I think it was KuCoin. They were not exporting like when on margin trading. They would export the buy records, but not the sell records. So when you imported that, it looked like you were making incredible amounts of money, but it didn't have the sells. So the data was skewed. You had to throw it out because it was terrible. The average person would never know that because KuCoin just didn't care up until beginning of this year. KuCoin just out exported horrible data. So it's a big problem. That's why I'm saying don't report any taxes more than what you believe in. So if you use these services, you don't like the number you got, go to another one. Worst case, report what you believe in. You're basically estimating, and you will do all right in an audit.
Excellent. This is an interesting question someone asked in the chat. I think I know the answer, but I'd like to hear yours. So, if someone is a miner and they're mining coin, how do they establish their cost basis and how do they report that?
The IRS's position on that is that the value of that coin is the cost basis is the fair market value in US dollars on the day you receive it.
So it would be essentially like selling maybe at the price when it's mined. Does that make sense? Because it is a taxable event.
It becomes yours. Like, so, you mine, a Litecoin, and so you get $100, price of Litecoin, it's $100 today. So you got $100 worth of Litecoin. It's all you have is the Litecoin, but then at some later date you sell it for, let's say, 150. So now you've experienced a $50 gain in US dollar terms on that Litecoin. So the cost basis is the fair market value, that is, the street price in US dollars on the day you receive it.
Makes sense. That's what I thought as well. Thank you. So those of us who maybe in the past don't have the best filing record, not speaking for myself, but for those of us out there that maybe didn't file them or didn't know they were supposed to, etc. Is it too late to start? And what should they do?
We have data that we can compile. It really suggests about 70% of, US crypto owners have not reported their crypto income. That might be a small amount for some people, but for some people it's quite large. For some people, they aren't even filing tax returns altogether. I know a lot of crypto people, even influencers, who don't even file tax returns. They just are hiding. They're hoping to be off the grid. If that's you, what I'd recommend you do is give me a call. We can set up a custom plan for you. The challenge is that if it's gone on for a couple years, you might owe more taxes than you have money to pay. And that could become very uncomfortable because then you might be put in a position where you have to sell all your crypto investments. So a lot of people say, well, I'll wait till the market goes back up. When the bull market comes back up, I can sell for profit and pay these things. And that's a valid strategy. What we would do is I would pull your IRS records, the records that the IRS has on a person, and see how much income the IRS thinks you made that perhaps you didn't report. And from that, we can start to say which years you're at greater risk of being audited on. And we can start to maybe amend those years and then maybe pay those off and maybe amend them or file them one at a time until we get you to a point of compliance where you're fully compliant again. So we can kind of structure, we could try to structure it. There's a little bit of risk in that because taxes have to be paid when they're due, but not everybody can pay that. I will say this: I'm coming out. We have a new podcast I'm coming out with, the Clinton Donnelly Show. It'll be coming out by the end of the month, and I've just recorded a podcast on why we need tax amnesty for crypto traders for the very reasons you just mentioned. It's extremely difficult to track records. People have gone back multiple years and they've dropped out of the tax system because they don't know how to get back in, get current. And we need tax amnesty so they're not going to be crushed by penalties, so they can be brought back into the fold, start being compliant again, and not have to be afraid that the IRS, two guys from the IRS won't come knocking on their door. So I have a video out there, and the call to action is to simply call your senators, and tell them that we need tax amnesty, for a special tax amnesty program for digital asset owners.
Well, I think we can all agree on that. think we can all agree here on that for sure. Holy crap, though, 70% is insane. And I guess that makes sense why they're committing resources to the IRS specifically for taxes. That's a wild percent. I believe it. I can't. Wow, that's wild. So you brought
It's
up
scary.
auditing.
It's really scary.
It is scary, and a lot of us, I think, we didn't intend to do it when I started crypto. Like I said, it just wasn't on the radar. It wasn't talked about. There weren't experts in the field of doing taxes there. I think most people would have struggled at all to file, if they could. You brought up auditing, and that's like the second prong of taxes that I think is important here. It's like the process of taxes, kind of what happens if you miss them, and then the scary topic, what happens if they come after you? So how likely do you think someone is to be audited in crypto? Maybe what factors could go into that? And then what steps should they do if they receive notice of an audit?
So the typical way people get audited, auditing is just one way that the IRS comes after people. Another way, and there's a couple flavors of that. The second way is criminal investigation. And we can talk about that too. So the IRS comes after people. They use computers and they data mine for what we call underreporting, where the IRS might know about more income that you had than was reported on your tax return. How do they learn about this? Well, there are W-2s and 1099 forms that are issued. One thing that the IRS is doing right now is they're going to U.S. exchanges, demanding the records of all U.S. taxpayers and all their transaction histories. I can only imagine that what they would do with the transaction records is to look at how much money was moving and to see if you reported that, at least that amount from that exchange, on your tax return. And they could probably take it a level deeper if they wanted to. But these are ways the IRS determines if you haven't reported all the income that you should have. When that happens, they will flag you for an audit. An audit goes down in one of two ways. One is you might get a letter. Well, both of them all begin with a letter. IRS never calls you. They never email you. They give you a letter. And one letter, typically called a CP 2501 letter, basically says, hey, it looks like you didn't report some income. This is what we know about. We didn't see any of this on your return. Can you comment on that? And I've seen people who had like a couple $100,000 of income that they just didn't report on their trading. And, that's how that begins. That's a much easier audit because all we have to do is defend that. And typically we can resolve that within a couple months. The other type of audit would be if they think you didn't. It typically is going to happen if you have a higher amount, I'd say over $500,000 underreported income that they think you didn't report. And then you're going to get a human auditor is going to be assigned. You're going to get a letter from the human auditor, and they're going to start asking for all sorts of documents about your life, all your bank account statements, all your credit card statements, everything about your crypto history. And they're just going to start digging in. And that's probably a 2-year journey.
Ooh.
The third type of investigation would be, now, this was all about underreporting. We're talking about people who filed tax returns, but they didn't report any or all of their crypto income. What about a person who didn't even file a tax return at all? Or they made a lot of money off cryptos and they simply didn't report any of it. In that case, and I had a client who contacted me because he got selected for an audit. He hadn't filed a tax return in 8 years, and he was, Coinbase said he did $4 million. So this is what triggered his audit. And once they started seeing that he had never filed a return, they looked at his bank accounts and saw there was a lot of money moving around. He got a criminal referral. That's when 2 guys with guns show up at your door and they want to talk to you. And that's the beginning of a criminal investigation. When we were at the Litecoin conference, I showed a video of one of my clients who had experienced this very thing. And he eventually got arrested. He was indicted for tax fraud, and he ended up having to pay $250,000 in penalties. And he had a 1 year in prison. He spent 6 months in prison and with a probation afterwards.
Well, nobody wants that.
No, nobody.
No. Yeah,
But that's
this
a
is
serious threat. If and this is the area that IRS is spending a lot of money on. Here's why: because audits take 2 years. It's labor intensive. It's expensive. They got to hire outside contractors to do the gain calculation. But with a criminal investigation, all the minimum threshold for criminal tax evasion is failure to report $10,000 of income. That'd be gain, crypto gains. That's a pretty low threshold, and they don't have to prove how much it is. They just have to prove that you didn't report it. Once, like as my client said, he got a phone call from the district attorney's office informing him that they're about to send him an indictment. And he called up 2 tax attorneys, and they said, your best hope is a good plea deal because there's no fighting it. You didn't report it. You didn't file a return. You're dead. You better hope on a good plea deal. So, that's the situation, and it's very quick, and it's a plea. It's the way justice is dispensed in this country. We just crush people with the threat of penalties in prison, and they just roll over. So this is now the IRS commissioner said that with the money that they're getting, they're going to get another 4,800 new criminal investigators. This would triple the number of criminal investigators. Department of Justice has hired 150 more lawyers, especially going after digital asset enforcement. So, the war machine is getting revved up.
Yeah. It sounds bad, but from what you're saying, it definitely sounds like for most of the time, your intent is important. If you're clearly avoiding taxes versus, hey, I did it wrong, or I tried my best. Hopefully, that's a little determiner of how they treat you.
The best thing to do is to, hey, look, if you all you did was you didn't report some income. There's overzealous people that are worried about not reporting a little bit. Think the IRS is just waiting to pounce on them. These paranoid people are overly cautious. I had one guy call me up. He said he bought Bitcoin at $900 and he sold it when it went down to $700. He didn't report on his taxes. Should he be worried? He spent a few $100s on a phone call to ask me about this. And I said, no, IRS doesn't have time with that. I mean, there's too many big fish to go after the small fish. It takes the same amount of energy to go after small fish as big fish. The IRS is focusing on the big fish. So what does big fish mean? If you have over $500,000 of gains that you didn't report, you're in big fish territory. And the IRS doesn't really know what your gains are. They do know what the total volume of your trading is. So if you're a high frequency trader, you would look like you're quite wealthy. I got to hit this. So today they're interviewing a new IRS commissioner, putting him in here. And he made the statement that they would not increase the audit rates on people with incomes under $400,000. Biden said the same thing. That's deceptive. Why is that deceptive? Because when I say incomes of $400,000, we're thinking adjusted gross income. All right, this is my income after expenses. But that's not how they think. When they talk about that, that's not the number they're using. They're using total positive income. What's total positive income? That's the income without the expenses. So, so it's your sale price of all your cryptos without considering the cost. Let me give you an example. You have $20,000 at the beginning of the year. You have $20,000. You invest it into a coin, and at the end of the year, it's now worth. It went up $1 a week. So at the end of the year, it's now $20,052. You sell it, right? What was your total positive income? It was $20,000. Let's look at somebody else. He starts out with $20,000. Every week he sells. He buys a different coin at the same price, and it goes up $1 a week. So every week he has a sell. That sell is like for the first week, it's $20,001. Second week, it's $20,002. Right. So it keeps going up. So at the end of the year, he has 50 times 20,000. He's got $1 million in positive income. So when we look at his tax return, he's going to be reporting $1,052,000, something like this, with a cost basis of $1 million. Right. So net difference is he had a gain of $52. All right. But at no time did he ever have $1 million. He only had $20,000. So why is this important? Because he would have a total positive income of $1 million. So when the IRS commissioner, when Biden says we're not going to increase the audit rates on people under 400,000, we're only going to focus on the rich people. This guy, because he's a high frequency trader, is now a rich person, and they're increasing the audit rates. The audit rates for people in excess of $1 million. These are new numbers. It's at 12% right now. They say they're auditing 12%, and they're trying to increase it. So the people they're going to go after will be crypto traders. Why? Because the billionaires in the world are too complicated to audit. They got all the lawyers, they got all the accountants, they're smart. It's the average Joe investor, like crypto investors, that they're going to squish, because we will have high numbers, will be high audit targets, so that the commissioner goes to the Congress. He say, yeah, we're auditing the rich people. No, they aren't. It's not. They're playing with the numbers. It's statistical lying, but we're the victims, and that's the problem.
Yeah, that's actually kind of what happened in my kind of nightmare experience. Is that specifically where they're looking at the bigger number, like the total sale, not the profit, because maybe I didn't report it right or whatever. But yeah, it said I owed them more than I made, and that didn't make sense. But it's very real. It's very real.
Which leads to, how do I prepare a tax return? And one of the strategies is to make sure you come up with a large total positive income number, so that it's larger than what the IRS would want to be expecting.
Makes sense. So I think, to kind of, before we wrap it up, I'm interested in what you think the future of crypto taxes look like. You did touch on that a little bit, but how do you see that maybe the tax laws evolving, or kind of changes coming in the future?
The Biden administration set out last March an executive order that the Department of Treasury was to lead all the departments of the government to come up with a coordinated and sensible strategy for comprehensive regulation of cryptocurrencies, including CBDCs. That was supposed to come out in October. They said, yes, here's the CBDC information, and the rest of it will come out in March. So I'm anxious to hear what comes out in March. I think there will be some changes to the tax laws. I hope they'll come out with some rules. They'll probably hate them, but at least there'll be some clarity. What's interesting right now is the SEC, Gary Gensler. He works for Yellen. I mean, he's part of the Department of Treasury. He's out there pushing a whole agenda about using what we'd call regulation by enforcement. And he is not being a team player with Biden and the rest of the administration. So, he's pushing his own agenda. It's not coordinated. It's a little surprising. That's one aspect of crypto taxes. The other aspect of crypto taxes, if you wanted to see, I could show you some information about some benchmarks that we did that might be interesting for your followers.
Sure.
Let's see if I can show you. So we use a variety of tools, and I had a benchmark done last summer. I asked my crypto analytics manager to have the staff use all the major services, and we used one of our larger traders, who was a very conservative trader. He only used U.S. crypto exchanges, no DeFi, just pretty clean. In his own mind, he did like 300 trades. There were larger dollar trades because he was a wealthier investor. But and we did this for several other customers. I'm going to show you his data. But we thought that all these services, the crypto gain calculation service, would return about the same numbers. It was more of an issue of ease of use and supported features. But what we discovered just absolutely blew my mind. Make sure I get the right one here. Not that one. Have to put on some other glasses here.
The serious ones.
The serious glasses.
We like glasses here. Good company.
Eric, that's it. What's the deal with this? Well, okay. All right. You can see that. So what you have here is this guy's data. Now, we looked at data points here, the total transactions. Now, what's the total transactions? These are the number of transactions reported by the service that the person had that year. As you notice, none of the numbers agree. All these guys have the same data, okay? And they all got the same data. They all got the same API keys, CSV files. An API key just basically pulls a CSV file from the exchange. It's basically a spreadsheet. They all got the same data. So now the first question is, how many transactions were there? The lowest number is right there at 170. The highest number is 26,000. About 5 of these numbers come in, or let's see, there's several of these numbers come in under 1,000. Right? Most of them come in under 1,000. And it's okay for there to be some variation in total transaction counts, because like you have a transaction, if you have a crypto exchange, if you've ever seen a transaction record that says on a certain date, you gave up this many of that coin and you receive this many of the second coin, and here was the fee. So you could look at that as one transaction. You could look at it as 2 transactions, the coin in, the coin out, or you might include the fee as a 3rd transaction. So, within a certain range, 1 to 3 multitude, you could understand that. But these services here,
I'm having trouble getting the shared screen. I have no idea why it's not working now. We had all the problems today, so I can't see it at the moment.
Let me try it again. Let's try full entire screen. Do you see this?
Yeah, it finally worked. There we go.
Woo-hoo! Okay. All right. So recapping, we were looking at the total transactions column. Well, look at this. Most of the transactions, that does not work real well, are under 1,000, except I have, this isn't so good, right here. These guys have much higher numbers. They're much higher than 1,000. I mean, 26,000, 11,000, 9,000. They all got the same amount of transaction records. How can these guys be so creative?
Yeah, more than 10 times.
More than 10 times. So at the very least, what these differences in total transaction numbers tell us is that each one of these services views the data very differently. They have a different mathematical and philosophical perspective in terms of how they're treating the data. And you as a taxpayer don't know this. You don't know what their agenda is, but they have very different numbers. Now, this was one guy's benchmark. I have other guys had a different blend of whatever they did, and the numbers will vary a bit. Some of the guys that are high here might be in the middle, and vice versa. But in general, this is a pretty predictable pattern here with this guy's very typical. But numbers like 11,000, well, just all of these in this range are just so astronomical that it raises a lot of questions. Now, why is this an issue? We were doing an audit, and the auditor at the final decisions came back and said that when they did the gain calculation, there were 23,000 transactions, and when the taxpayer reported, that's us, we reported 2,000 sell transactions. And on that basis, he said the taxpayer was not reporting a substantial amount of transactions, and they were more accurate.
Yeah, none of them add up.
None of them. It's totally fabricated.
None of them say the same gain. None of them have the same amount of transactions. That's scary.
This is very disturbing here, because the more transactions, I'd have to reconcile 26,000 transactions. Note for you, 11,000 transactions. I have to reconcile those inside the software. It's a lot more work that's being generated by this creative accounting that they're doing. Now, this is just every time I look at this, Tom, it just disturbs me, because it just disturbs me. So
If it
the
was like
total
2
proceeds,
times or 3 times, I would understand, because maybe it's like a buy, a sell, and a fee. But we're seeing 10x. Where are they getting it?
10x, exactly. All right, so let's go to the total proceeds column. This is the total value of everything I sold that was taxable. All right, so there's a couple factors there. What was the price of what you sold? Now, of course, you're getting this data off the exchanges, so it's already given to you. You just have to decide if it's taxable or not, and then you add it up. The range is here from this one is the low one at 1.2 million, and the highest is this guy here at 4.4 million. Now, this is total proceeds. This is not your gain. This is not what you're being taxed on. But remember, total proceeds was that number that they audit you on. All right, that's the audits are driven by this number. So this is a massive difference. It's very disturbing. They're all getting the same data. It's extremely disturbing. One of the things that bothers me is, we believe in distributed ledger technology, the immutable blockchain, that everybody can read it. Nothing's hidden. We should all come up with the same data. These services all read the data. They come up with totally different answers. That's disturbing. I mean, and the reason is because none of the blockchains at layer 1 are given, or none of them track tax information that an accountant would need. We need to have like a layer 2, layer 3, or higher protocol who's going to actually bring tax information here. But without that, we have a very difficult task to do. Now, the total gain, this is the interesting column, because this is what you're going to report on the tax return. This is what you're going to be taxed on. All right. So here we have one company reporting just shy of $70,000. And here we have another company reporting almost 800,000. Here's another one at 500,000. Most of the rest are in the 140 to 250 range. But these two outliers are really out there. These last two companies here, TaxBit and Zen Ledger, these are the ones that the IRS subcontracts.
Ooh, wonder coincidence? Maybe not.
This is interesting. This is like, these two guys, they're going after the government business. And what would the government want? They would want big numbers. Okay. So this company here, it does work for Coinbase. So like if you get a Coinbase 1099, they're giving it to you and they give you free service. So, Coinbase wants you to not feel like you have to pay a lot of taxes, right? So, surprise, surprise, the gain amount these guys generate is low. Are they connected? I don't know. I will say this, that the companies here that have venture capital funding, the US companies, they all tend to have either the very high or the very low numbers. The companies here that are not venture capital, usually they're foreign companies, are the ones that tend to be most similar in answers. So that would be Crypto Tax Calculator, Accounting, Coin Panda, I believe. These tend to be a little bit more in the middle. Is there a relationship there? Hard to say. I believe these companies are struggling to make money. Most of them, they get the venture capital funding. They're trying to do other products, not this product. So this is all interesting data. I have another one I can show you. Very similar. This is decentralized data. These are people using decentralized exchanges. So we're reading all the data off the blockchain, right? There's no exchanges, just blockchains. Look at this. We got a low here of about 3,500, and we got a high of almost 10,000 transactions off the blockchain. These guys, what blockchains are they reading? What is a transaction? How do you defend that stuff? It's incredible.
I have
total
no
rewards,
explanation.
88 million calculated. This is proceeds, not total gain. 88 million up to 341 million. Big, again, another 4x swing. What do you do as what is so? This is what you have here is a crisis.
Yeah.
You go to these websites. They'll talk about how easy they are, what blockchains they support, exchanges they support. Nowhere on their websites do they say that their results are accurate.
At least they're not lying.
They're not lying. If you go to their terms of service, you'll see in capital letters, they'll specifically state that there is no warranty as regards to the accuracy or fitness of purpose for this application. They do, and none of these guys will defend their results in an audit. I worked with one company here. I won't point it out. They did all my crypto work before I had my own accountants. Once they learned that I was starting to defend people in audits with their results, they absolutely stopped doing gain calculations for me. They refused to do calculations on people that are going into audits. And, they basically would not, and they were the ones doing the reconciliation work, and they would not stand behind their numbers in an audit. So it's all very,
I
these
think
guys
you said it.
talk a big game,
I think you said it, crisis. The more I listen to it, it's a crisis. It's hard to figure out what even report. The reportings are different. People aren't willing to guarantee or back up their numbers. Like this is complex stuff, and it's coming more, I think, every year from now on.
Well, yeah, as we get more and more creative investments in crypto, we will have more and more complexity. These guys can't afford to continue this work. I mean, they're doing their work for like $200. They can't. These guys it's a money loser for most of them.
Wow. Well, that's really enlightening. We're running to kind of towards the end of the time that I wanted to do today. So I think we should wrap it up with Clint. Tell us where we can find you, what you're working on. You said something about a podcast. Give yourself a shill.
Thanks. Yes, we got the Clinton Donnelly Show. It'll be starting on YouTube. There'll be some other platforms we're working on. They can reach me on Twitter. I'm Crypto Tax Fixer. I have a company called Cryptotaxaudit, cryptotaxaudit.com. If you'd like to talk to me, you can go to my website up at the top. There's schedule a private consultation. We can talk about your situation. Generally in a half-hour phone call, I can put you at ease. We can talk about if you're a non-filer or haven't been filing, concerned about things, you want to take care of things, we can lay out a strategy to bring you into compliance. We do the gain calculation. We do bulletproof crypto returns. We've done 3,000 crypto returns, and none of them have been audited. We know how to do this. So thank you very much. We also have our audit defense service, which is perhaps a better way to start to get compliant. It's like car insurance for your tax returns, $250 a month. And if you get audited, we do the entire defense. We do the regain calculation. We'll attack with our forensic accountants the IRS numbers. It's a great deal, especially if you have over $200,000 in assets. You need to be thinking about protection. So that would be a great solution for people.
Absolutely. That was even when we talked previously, what I was like, man, that sounds like what I want. Cause I know I'm going to get audited. I don't know. I do my best, but I just have this feeling. But thank you so much, Clint, for your time. I think from the comments in this live stream, people really found value just as I had hoped. And good luck with your podcast and YouTube. We'll have to have you on again sometime.
Thank you very much. It's a pleasure. I wish you all the very best in your trading.
Cheers. Thanks, guys, for watching. I have his link. I have the Crypto Tax Audit link pinned to the top of the chat. It's in the video description. Use my link, and I'll catch you.